And good evening. This is the Elliott wave update for the S&P 500 for Sunday, March the 27th, 2022. I spent some time on Friday afternoon / evening updating my charts. And I started with the cash markets for both the S&P, so the SPX, and also in the NASDAQ, I did the NDX. And it was a very clarifying exercise for me in that it made very clear balancing the two together, because in essence, the future needs to equal the cash in terms of direction and count. And there was a couple of places that I was having trouble with the count as I had it on the future. So to dive right into it, I will be doing a separate update which will cover the long-term picture. So I've updated now the long-term picture, what we can expect, where things may go, and during over what time period. So beginning with the daily chart for our daily update, here is where I believe we are and where the count and the labeling have changed. So what I have now done is at that 4101.75 low, which was on the 24th of February, that is now the completion point for intermediate wave 1. So on a daily basis, the daily chart, I can now count 5 waves of minor degree and 5 waves of minor degree, down, which puts in an intermediate 5th wave down. So I can count both 5 down on the hourly chart and now 5 down on the daily chart. So it gives a lot of support to those highs being in, and that what we're now doing is just an intermediate wave 2 corrective rally. So having put that together, I now want to go over in a little bit more detail on what is happening now. So indeed, the low is here. And I'll tell you, because we can get a little funky here, because that is the low where I put the low of 1 against wave 4. And we know what that rule is. But now I want to take this over and put it on a close basis, which I do often when I'm dealing with what could appear to be a sketchy Elliott labeling. Here on the closing basis, which is how Elliott formulated his counts, that it is wave 1 does not overlap wave 4, and it's much clearer: 1, 2, 3, 4, and a 5. Actually, that 5 belongs over there. And I will do that. Well, actually, I'm going to leave it right there because that fits on the other chart. But I believe that is going to be it. So just forgive me and let me activate this drawing and put that over there, because that was the other point that the cash market was showing me, or actually the line chart was showing me the cleaner points where it did end. I'm using for the Fibonacci basis that extreme, which is 4101.75. But for a count basis, this is the low of the sequence that started there. So 1, 2, 3, 4, and a 5. And that put in wave 5. And then we got, this should be 1, 2, and now this is a 3. So I can move that as well. Nice to be working with the daily chart. And then put the 2 over here. Now it may still kind of maybe end up, but this is going to make it clearer that we're in this 3rd, or the 3rd is there. That was the 4, and this is the 5th. And that would be telling us, that the 5th wave may be in. And therefore, wave A of intermediate wave 2 is complete. So let me demonstrate again on the daily chart. 1, 2, 3, 4, 5, intermediate wave 1. So now I'm in an intermediate wave 2, which will consist of 3 waves of minor degree labeled A, B, and C. So this is wave A, and it is pretty clear that we are doing and have maybe completed 5 waves up, but that is only minor wave A. So I'm looking for the completion of minor wave A. We have resistance at 45, 38, 52. It got up, I believe, to 36 on Friday, but actually 39, according to where the extreme went. If I look at that high. So this may be complete. And if that's the case, then we're going to drop in a B wave. And again, I'm leaving this open because, as you can see, the market's not really flying lower to start a B wave right now. It's off 750, but no great shakes, nothing really to kind of get upset or worry about. When we have support at 45.11 or 45.14, what is that going to be? Come on, tell me. 11, 45.11, and then we have additional down here at 45, 44, 59.60, and we have a cluster of our moving averages. Again, daily chart. Bringing it down to the hourly chart now, we can see in the interior where somehow this is still got a bunch of ugly stuff on it. This is labeled 1, 2, and not A, B, and this being C. So let me get rid of that. And this is the 1, and then we got a 1, and this 2 again ends up over here. That's where actually the wave went. That's the hourly chart. Let's go to here. Candles. Yeah, 1 and then 2, and they don't really. We might have had a little bit extra there, but I'm leaving it as a 1, 2. And I'm going to activate this strong and put this one back here. Still thinking, 3, you can tell, it gets all kind of skewed. Let's get it lined up so it makes sense. 3, 4, and this could be the 5th. So that's the hourly chart. So coming off, we'd be looking for a B wave, and we need to run the fibs from there to here. Now that's saying that our highs are in. And quite honestly, it's a little bit sketchy, and I don't know. We'll go to that 40 level, we'll put it right there. But we do have, if that is the high, we're looking for a B wave. B waves can go 382 to 50%. This one's on the way up, so now we got to look at these interiors for what we can do on the way back down. The B wave can go all the way down. So we got 43.86, 43.40, and then we have on the downside 42.92. And a B wave can go all the way down there and then shoot up in the C wave. So we should get a little bit of two-way play here over the next day or so. Once we can confirm that this is the 5th and the completion of the A wave. Otherwise, we continue to have resistance at 45.39, 40-ish, and then 4,600. So while we'll likely have some in between, we can't discount the fact that it could go all the way up to 4,600 before the B wave begins. Okay, so how I want to leave this. The update chart starts on the daily. I may have to make some additional adjustments because they're not lining up where I want them to. This continues to want to line up here, even though that came out there. So I'm going to be I will make my adjustments and I'll put them back together where the 5 and the 1 will represent 4101, because that's where I'm running the Fibonacci retracements for the wave 2 off of that low. So again, I will use a closing basis for labeling. And again, that is likely going to push us over to there. So if I go to the daily and come back over here and go over to the line chart, it does put it over here where I have it. But for the purposes of the retracements, I do include the extremes. So here we have that. And then again, this does fit 1, 2, and I'm going to leave it. And then we have the 3rd and the 4, and then possibly the 5. So right now, leaving it the way it is, we're going to allow for additional upside to start the day. And then we'll get a B wave followed by an additional C wave. So I continue to believe that the next week or so, premium will continue to remain in the calls, which will suggest stronger rallies rather than declines. Okay, next update will be on Monday, the 28th.